Quick question on Satyam as well to you, because so far since the scam happened, the industry is stuck to a no poaching policy, or so we believe. What will happen now, both from an employee perspective, Satyam employee perspective, and Satyam client perspective? Do you think the top guys will now be free to go out and solicit both the clients and employees of Satyam?
Well, I think all rules are off. The deal is over. The industry is very happy that the matter is behind them. Now competition sets in, and each one for himself or herself. So it's business as usual. So we have to wait and see what happens. But I think as far as industry is concerned, and globally when you meet people, I think people are very happy that the government of India has done its job in a wonderful manner. I must compliment the government, and this matter is getting closed, and the people who did this are in jail. The investigation is going on, charges have been filed, and then if you look at that, this is unbelievable. You can't believe this can happen in India. It happened, and it's been resolved substantially. But from the industry point of view, from the competitive point of view, I think there's going to be competition for all customers.
So Infosys will go out and feel free to solicit clients and employees of Satyam now?
Well, I think Infosys will talk to clients who want to do business with Infosys, and Infosys will compete in the marketplace. And as regards employees, if they apply and we feel that they're fit, we definitely will have a look at them, if you're hiring.
So the answer is yes?
Well, yes.
Udayan also wants to know if you were tempted to look at Satyam, because he's already asked that to Shibu and Chris. So were you?
No.
No?
No. Not for a moment.
What's the main problem over here, Mohan? Is it the size of the liabilities you might take on? Is it
no, it's not the size and the liabilities.
Workforce?
It's not the size and the liabilities. It's just that you're bulking up in the same manner at substantially lesser rates. And then you have a very high, very large workforce which may not be gainfully employed. For example, a very large people could be on the bench because the revenues I heard from public information has come up substantially. So there could be a large number of people in the bench, and the new owners have to decide what to do. But there are challenges, and in this global crisis, for us, in this global crisis, where there are so many challenges all over the world about currency movements, about pricing pressure, about this TARP and this politics and all that, you need your best managers to be focused on growing the business, what you're doing, rather than settling some other issue. Because we see in this global environment an ability for us to look at acquisitions much more strategically. We see an opportunity to acquire clients, which all of them are doing, and to grow the business. And when this settles down, we want to be among the top 2 or 3 players who have come up and who have done well. And that requires full management input.
From an HR perspective, do you think Tech Mahindra can absorb and work with all the employees of Satyam, or do they need to let thousands of people go?
Well, I think the revenues have come down substantially, so there's going to be a deep challenge, Udayan.
The matter hold on to all the employees?
Yes. My personal view is there's going to be a deep challenge to hold on to all the employees. They have to decide what they want to do. But, today for everybody, all the IT companies, there's a big challenge in holding on to your workforce. Because revenues are not growing. The currency is against you. Pricing pressures are against you, right? Unless you have a lot of cash in the balance sheet, you don't have debt, and you have reasonable ability to manage your margins in a narrow band, because you've got to keep your margins alive, and it's a very competitive environment, and you have taken steps in the past to make yourself competitive, it's going to be challenging. And that's why I said earlier, this company, Infosys, has been built to last these challenging times. Murthy and his colleagues and all of us have worked hard the last 15 years to build this company, to create appropriate structures which can last a tsunami like this.
Subhash, let me scratch that point about budget spends as well. I was asking Chris about whether things have now gotten whittled down to monthly allocations. Is that something you're witnessing, or are people willing to commit quarter down payments that they would put down?
No, I think clients are bracing for worse times. And I think it's more the future than the past that they're worried about. And I think that bracing for the worst times is actually making them, have their budgets down and hunker down on even further on the cost expenses. I don't see, and we don't see this kind of psychosis going away for the rest of this calendar year or fiscal year. So I think the budgets that there are certain clients who have not yet finalized their budgets, but some of them also have their fiscal year starting in April, so that we'll have to give them some time for that. But I think by and large, clients are clear on where they are in terms of budgets, and they're going ahead. And as the numbers have already shown, that most of them are down on their IT budgets. So it's not a surprise.
Ashok, last year at this point, we spoke a lot about big deals, the 100 million plus. Are those happening at all, or is there a more or less freeze on the big deal landscape?
The BFSI, excuse me, in the BFSI sector, there definitely is a reduction in terms of large deals. But across other sectors, we are seeing certain amount of large deals still in play. But you have to. The word of caution here is that it starts off as a big deal, and then there's some amount of whittling down for various reasons, and some things get off the plate. But we are still seeing some play in the large deal sector. BFSI, not as much.
How much of a whittling would you say you're seeing right now? 10 to 15% or more?
Hard to put a number on it, but yeah, around that number would be appropriate.
Vijay, which vertical has given you the most trouble in Europe?
I mean, again, if you look at the slowdown, it's been UK as a country, and the slowdown in telecom and financial services. The rest of it continues. In fact, pharma, energy utilities, manufacturing in the continent, there has been a significant uptake. Going forward, we will continue to see this scenario play out in this fiscal year as well, that the pharma, energy utilities and manufacturing in the continent will continue to show growth. And there will be challenges. Maybe there will be some uptake in telecom and financial services, but it may not be as significant as in the past.
Subhash, over the last couple of months, there have been a few points of improvement in the US and in the European economy. Not conclusive yet. Has that translated into even a small degree of return of optimism among some of your clients, or are they all in a bit of a shell?
No, as I said, I think people are not focused on the present at all. They're focused on the future. I think the bottoming out and all, those are really not facts yet, as understood by most people. So I don't think there is a whole lot of optimism yet. I think it might take a couple of quarters of no bad news for that to come in. So I wouldn't say that it's optimistic at this point in time.
Mohan, what about capex? Of course, you would want to hold on to as much cash as possible in this environment, but would you go slow on capex for fiscal year 2010?
Yes. Last year we spent, fiscal 09, we spent 1,350 odd crores, and this year we're spending only 600 crores. So we have a capital commitment of about 300 crores at the balance sheet date.
What have you cut capex? You've halved capex. What have the cuts come in? Under what heads?
Well, one is that we completed our expansion in Mysore. We built our training centers. That's not there, so money has been spent. And the second is that we're not adding too many seats. We don't need too many seats. We have 95,000 seats as it is, and 20,000 seats are under construction. So we're going to complete that construction. So we'll have about, 115,000 seats end of this year. And there's enough for us, for all the people. And maybe the later half, if things pick up, we could start something more. But right now, that's all it is.
As an industry veteran, Mohan, tell us why there's such a variance between what Cognizant has set out as the guidance versus what Infosys has.
Well, I think it depends upon your strata of the market. It depends upon your clients. It depends upon your exposure. And I think different people feel things at different points of time. So you've seen how the banking crisis spread. Some banks felt it first, some banks felt it later. Now I think the big players have felt it. And I'm sure that, the economic environment is there for all to see. It's no different for anybody, right? Some of us could be more aggressive in terms of price. We could cut price deeply to grow the top line. We'll suffer on the bottom line sometime later. Some of us could stand firm and say that we don't want to cut price beyond a point. And some of us are going to say that, look, we know there's a lot of risk in the business. We'd rather not do some part of the business. So if you look at the big two players, top two players in the world, I think they have said very clearly that this is impacting them. Their growth rates from their 3 quarter ago projections and now is come down. And we don't know the latest numbers. And remember, Infosys has just completed the quarter in March 31. We are in, April 15. We're giving you the latest Taja Khabar, like they say. The latest news, right? So you are hearing some older news. If you update the news and hear them right now, maybe the picture will be different.
On that note, we'll thank all of you, gentlemen. Have a good year ahead. Thanks very much. That's Infosys FY010 guidance. Circumspect, as you would expect in this environment. They're hopeful that the second half might be better. Not saying that things are dismal yet, but that's the best they can hold out, that there will be modest reduction in both their revenues and in their profits next year on a dollar basis.